Hello and welcome to another chapter on US taxation. So today we are here to present on the detailed understanding of child tax credit, which we normally call as CTC. Now that we have a strong understanding on the tax credits and how they reduce the tax liability, and in some cases even generate refunds. So let's move from the broader concept to one of the most important and widely used credit in the practice. Because while tax credit as a concept are powerful, their real impact is best understood when we look specific real life credit that taxpayer actually use. And among them, one stands out for its direct impact on the families is the child tax credit. So this credit is not just about reducing the taxes, it's about supporting the household, improving cash flows, and in many cases, putting money directly into the hands of the taxpayers. Whether it's a middle income family reducing their tax burden or a lower income household receiving refunds, the child tax credit plays an important and critical role. So in this chapter, we will break down how this credit works, its eligibility calculation, refundability, and the practical impact so that one can have clear understanding how it influences the final tax outcome. So with this, let's move to the first agenda slide. Okay, so the key agenda that we're going to cover today is we'll have brief understanding upon the introduction of the child tax credit. Though we have understood this when we were explaining the concept of tax credit in the last session. We'll understand the eligibility criteria for claiming the child tax credit. We'll have an example wherein we are going to show the calculation of the child tax credit. We'll also have an understanding on refundable portion of the additional child tax credit, and we are going to have a deep dive on that. We'll also compare, or let's say, interrelate that how CTC interact with the other credits that are available to an individual. Uh, we'll have a look at the recent update and the changes in terms of the eligibility criteria or in terms of the quantum of the benefit. We'll have a quick slide on the key takeaways and then we are going to wrap up this chapter. So we'll move to the first slide then. Okay, so we'll understand and quickly review what we also discussed in the earlier chapter. What is child tax credit? So, the child tax credit is the tax benefit provided to a taxpayer who have qualifying and dependent children. This is very, very important. It directly reduces the tax liability. So, because it is a tax credit and hence it is going to reduce the tax liability, which is dollar by dollar, dollar for dollar. And it's going to impact the final tax payable. So, what is the purpose of CTC? So, it provides the financial support to the family with children and reduces the overall tax burden, encourage the household stability and the child welfare. And what is the quantum that is allowed? Credit of up to 2000 per qualifying child, which includes a non-refundable portion, which reduces the tax liability, and it has a refundable portion, which is the additional child tax credit, and it may generate the refund. So basically, it's a partially refundable kind of situation wherein it is non-refundable portion for the CTC, and then we have ACTC, which is like refundable portion. Who can benefit? Individual or the families can have the benefit for this. Have dependent children under the age of 17 and meet the income eligibility criteria. We have to understand what is the criteria as well. And definitely he should file, the person who is claiming the credit should file the US tax return. So why CTC is important? One of the most widely claimed tax credit can significantly reduce the taxes payable and increase the tax refund because it has the two elements. One is refundable, one is non-refundable, especially beneficial for the middle and the lower income families. And how it is normally calculated. So we have to calculate the taxable income, then we have to calculate the tax liability. We'll apply the CTC, we'll get the final tax, or we can get the refund if it is an ACTC. So quick example here, tax liability 4,000, CTC 2,000, final tax payable is 2,000. So this is how the tax credit work. But the moot point is that we need to understand the credit which is like available at the 2000 per qualifying child, and then it is non-refundable, but it is a refundable portion also if we are claiming the ACTC. So we'll move to the next slide. Okay. Now we'll understand the concept of eligibility criteria with respect to the child tax credit. So to claim the CTC, which is a child tax credit, the taxpayer must meet strict IRS eligibility conditions, which means that the qualifying child has to be there, and then the taxpayer should be within the income threshold. What is the qualifying test? Age test. So child must be under 17 year at the end of the tax year. This is very, very important. So if child is under 17, then only this child tax credit is available. Otherwise, it is not available. What is the relationship with the child? The child must be either the son, daughter, step child, brother, sister, step sibling, or the descendant, example, grandchild, or a niece or a nephew. So all these are eligible for availing the child tax credit. The relationship test has to be there then. Residence says child must live with the taxpayer for more than half of the year. Very, very important. So if child is not living with the parent for less than half year, then this credit is not available. Support test, child must not provide more than 50% of their own support. So which means that a child is dependent upon the parent, and child must not provide more than 50% of their own support. Next is SSN requirement. Child must have valid social security number, and SSN must be issued before the tax return. So which means that there are certain eligibility criteria to avail the child tax credit, and all these conditions needs to be satisfied before the person who is filing the return can claim the benefit of the child tax credit. Dependent children, child must be claimed as dependent on the taxpayer returned and cannot be claimed by the multiple taxpayers. So this is very, very important. So a particular tax credit can claim if a particular child is getting claimed in the multiple tax return, then it is disallowed, and it can also invoke the penalty provision. Taxpayer requirement must have a valid SSN or ITN. Filing status, eligible status includes a single, married, filing jointly, and head of household. So which means that it is not available to the status if they are married filing separately. So restriction apply to the married filing separately. Income limit is that full credit available up to 2 lakh single and 4 lakh MFJ. And then if the income is beyond this 2 lakh for single or 4 lakh for MFJ, then credit reduces beyond these limits. So additional conditions are child must be US citizen, national or resident alien, must not file a joint return unless the refund purposes under 17 year and the end of the year net tax year. What are the common disqualifiers? Child above the age limit, child is not having the SSN, income exceeding the phase out limit, incorrect dependency claims, and child not residing with the taxpayer. So typically the disqualifiers are the conditions for which a particular child has not met the qualified conditions. So if you look at all these tests above, age test, relationship test, residency test, support test, and SSN requirement, if any of these conditions are breached, then it is treated as the disqualifier for claiming this claiming this tax credit. So I'll move to the next slide. Okay. So having now understood the concept of child tax credit and having understood the eligibility criteria, I think we are in a good position to understand that how this calculation actually happened. So we have come up with an example wherein we could able to illustrate that how the child tax credit is actually calculated. So the child tax credit is calculated in a structured sequence. So number of the qualified children, income late phase out, refundability rules, and the proper calculation ensures the maximum benefit and also ensuring the compliance at the same time. So first step is the identify the qualifying children. This is very, very important. And it is being done basis the eligibility criteria that we already discussed in the last slide. So determine the number of the children meeting age, relationship, residency, and assistance criteria. Then we have to compute the initial credit. So credit is 2000 per child. This is very, very important. So initial CTC is 2000 per child and maximum is 2 child, which is like 4000. Then we have to apply the income phase out threshold. So which is like 2 lakh for a single and then 4 lakh for a married filing jointly. Reduction rule is that reduce the credit by 50 for every 1000 or part thereof above the threshold. So which means that the moment the income breaches the threshold limit, then for every increase of 1000, the child credit is going to reduce by $50. So example, exceed the income exceed by threshold by 10,000, then reduction is 10 into 50 because every 1000 increase leads to reduction of $50. So 10,000 means 10 time increase of 1000 multiplied by 50 is 500 reduction. So adjusted CTC is if there are two children 4000 minus 500 which is 3500. Then apply the non-refundable portion. So CTC first reduces the tax liability up to zero. Example, if we have a tax liability of 2500, remaining credit will offset. So 3500 minus 2500 is the 1000. So this 1000 is basically non-refundable. Then we have to calculate the refundable portion. So basically ACTC is refundable portion. Refund allowed if earned income is greater than 2500. So if earned income increases is more than 2500, then we can apply for the refund. So refund calculation is 50% of the earned income above 2500 or maximum refundable limit per child approximately 1600. So refundable is 1600 per child, and then it is subject to the fact that the refund calculation cannot be 15% of more than the income which is above 2500, and it has to be earned income and not the passive income. So final tax liability and the refund position is that if credit is greater than the tax eligibility, refund generated. If credit is less than the tax liability, tax reduced. Summary: qualified children, initial credit, phase out, offset tax, and then the refund if eligible. So we'll move to the next slide. Okay. Now we'll talk about the refundable CTC, and this is very important because we know that CTC, which is the child tax credit, is non-refundable. So which means that once we apply the child tax credit to a particular tax liability, and if tax liability is less and the child tax credit is more, then we cannot get the refund. But there is a concept of the ACTC, which is like on which the refundable CTC is generated. And what is ACTC? So additional child tax credit is the refundable portion of the child tax credit and allows taxpayer to receive a refund even if tax liability is zero, which ensures the benefit reaches low and moderate income tax family. So when does ACTC apply? So when the total CTC exceeds the tax liability. So in this condition, remaining unused tax credit becomes eligible for the refund. And the conditions are must qualify for a child tax. First of all, CTC has to be applicable. Must have earned income which is greater than 2500 and must have a valid SSN or a child child and eligible filing status. Formula is that 15% of the income which exceeds the 25 earned income which exceeds the 2500 subject to the maximum of 1600 per child. So final ACTC is the lower of remaining unused CTC, calculate refundable amount per child. So step by step calculation is that first we have to compute the CTC, apply the tax liability, identify the unused CTC, and then we have to do this calculations. For example, earned income is 20,000, CTC is 4,000, tax liability is 1,000. So here tax liability is 1,000, so which means that offset can be done only for 1,000. So which means that balance 3,000 it is non-refundable. But because we can claim the ACTC and hence we could able to identify the refundable portion out of this 3,000. So step 2 is to calculate the income which exceeds $2,500, which is 20,000 minus 2,500, and we'll apply the percentage of 15% to this, which means that calculate we can claim the maximum of 2625, and then we have to apply the capping for that particular ACTC, which is 1,600 per child. So maximum capping is 3,200. So then we have to compare 2625 and 3200. So though our remaining portion of CTC is 3000, we can get the maximum refund of 2625 only, which means that balance of the amount will need to be foregone. So that will be foregone and we'll get the maximum refund of 2625. This clearly illustrates the concept of how we can have both refundable and non-refundable portion for a same credit. CTC is non-refundable, but ACTC is refundable. So we'll move to the next slide. Okay, now we are going to discuss that how this CTC interact with the other tax credit, having understood the concept of CTC, having understood how what is the eligibility criteria, then we understood the concept of calculation of the CTC and how it is a non-refundable. We also understood the concept of ACTC, and then we understood that it is a refundable portion of the CTC. Now we'll understand that how they interact with the other deductions. So taxpayer uh, uh, so taxpayers are often eligible for the multiple tax credits simultaneously. Understanding how the CTC interact with other is essential. So key principle or order of the application is that tax credit must be applied in a specific sequence. So first we'll apply the non-refundable tax credit. Secondly, we'll apply the child tax credit, which is non-refundable portion. Then we'll apply the refundable credits. So when we apply this in this sequence, then for in refundable credit, we have to first apply the earned income tax credit, and then we'll apply the additional child credit to get the maximum benefit. So interaction with the earned income tax credit. So both CTC and EICTC can be claimed together. So CTC reduces the tax liability first. EITC is applied later to generate the refund. So result is that tax received plus additional tax benefit by way of the tax refund. Next is interaction with the dependent care credit. Both relate to the child but serve the different purpose. CTC is basically for the journal child support, while dependent credit is for work-related childcare expenses. Both can be claimed if eligibility conditions are met. Then interaction with the education credit. So American Opportunity Credit and the Lifetime Learning Credit can be claimed along with the CTC. So basically, is all these credits can be claimed along with the CTC, and the rule is that education credit applies before the CTC. Impact of the final tax outcome. So tax liability, for example, is 5,000. Non-refundable credit is 2,000. CTC is 2,000. EITC is 1,500. So how we should apply? So first we'll apply the non-refundable credit. So out of tax liability of 5,000, we'll reduce the 2,000 as a non-refundable tax credit to get the 3,000 as the final tax payable. Then we'll apply the CTC. So out of the 3,000, we'll apply the CTC, which will reduce the further tax liability to 1,000. Then we'll apply EITC to generate the refund of 500. So out of remaining tax liability of 1,000, we'll apply 1,500 to generate the refund of 500. So key consideration is that credit cannot be double counted or excess allowed. Some credits have separate eligibility rule and can be used differently with the income definition. So we'll move to the next slide. Okay. Now we know that the tax laws are subject to the changes by the tax authorities, and there are some recent changes that has happened to tax credit, child tax credit as well. And the child tax credit has undergone recent legislative changes. So what are those? Increase in the credit amounts. The credit increased from 22,000 to 2,200 per child and applies for 2025 year, filed in 2026, which result to higher tax saving for the families. Refundable portion of ACTC, which was 1,600, has increased to 1,700 per child based on the earning income threshold of 2,500. And also the income threshold limits has remained unchanged for the time being, which is 2,000 for single and 4 lakh for the married filing jointly. So with this, we largely come to the end of this chapter. We'll quickly move to the next slide and took a snapshot of what we have learned till now. Okay, now we'll understand the quick synopsis of what we have learned till now. So for CTC, which is child tax credit, it provides a reduction in the tax liability, a dual benefit in the form of reduction of the tax liability and then refundable portion to get the refund as well for ACTC. Eligibility criteria must meet the age, relationship, residential, and the support test. They should have the valid assets and mandatory. Incorrect eligibility, which leads to the credit disallowed. Income impact is that full credit available up to 2 lakh or 4 lakh for MFJ, and credit reduces beyond this limit. Calculation step is to first identify the qualifying children, compute the tax credit, apply the phase out test, offset the tax liability, and then calculate the refundable portion. Interaction with other creditors that must follow the sequence of the application, work alongside EICC and the dependent care credit. And then CTC is not a benefit, it is powerful financial support mechanism that can reduce the taxes and generate a refund when applied correctly. So with this, move to the end of this chapter. Let's quickly move to the final slide and see what is it that we're going to cover in a next chapter. Okay. So now that we explored the child tax credit in the detail, its structure, eligibility, calculation, and the refundable component, one key insight should stand out that tax credits are not just about reducing the tax, they can actually become a source of the income for the taxpayers. The child tax credit introduced us with the concept through its refundable portion, that is ACTC, but there is another credit that takes this idea even further. So credit that's specifically designed for reward work, support low to the moderate income earners, and provide significant refund even when no tax is owed. That credit is earned income tax credit or EITC. So next, let's move to the EITC, and we are going to come with this chapter very soon, where we are going to explain the concept of the EITC in detail. So with this, thank you, and please watch this video till end and share this video and subscribe our channel. Thank you, goodbye, and have a nice day.